Good morning, traders. It is Friday, July 27th. Taking a look at the morning charts. We've got a little bit of price action going on this morning in stocks and precious metals. And we'll just kind of start off with the US dollar index. Here's the 4-hour chart. You can see in the last day we had a pretty sharp move down on that news about the ECB doing whatever they can to support the euro. Of course, that helped boost the euro, and the US dollar index gave way and moved down, sending stocks and commodities up fairly sharply. And this morning, if we just zoom in, you can see here in the last 4 hours, or pretty much yesterday afternoon, it pretty much came down, traded sideways, started to put in a little bit of some bottoming candles here, and we started to scale into a small short position as it was down at a support zone. It's continuing to be a little bit under pressure this morning. Overall, just zooming out a little bit here, you can see where we're trading in the grand scheme of things. We will have a support zone. It's still trading right through a key support zone here, which are these previous kind of highs. There's some minor pivot highs, a small consolidation here before it broke above, another support low. So it's kind of where we're trading and flirting with right now. If we do break down, we'll likely come right down into about this level right through here, which will be, there's several layers here of supports, some pivot lows through the middle of more or less some pretty big whipsaw action here. And you can see we had a couple breakthroughs, another pause and a breakthrough. So we could see the US dollar end up coming down a little bit further. This is more or less a mini bear flag. It's come down, it's paused, and it looks like it could end up squeezing a little bit lower. Very similar to what we saw right back here, where you actually see a move down, see it consolidate a little bit, and then squeeze a little bit lower into the next support zone before reversing and heading sharply higher. So that's what we could see here. We could see it squeeze down a little bit lower and send the markets grinding higher today and possibly Monday, and then from there we could see the US dollar start to either form some type of bearish pattern and kind of drift up into resistance, which we'll see resistance up into this area. And it could end up heading lower next week with a rally in the stock market, or we could end up seeing it start to head up to make some new highs, and it could be a pretty sharp sell-off in the equities market. So overall, I don't think we're going to see too big a price action today. I've been favoring the long side for a couple days as our cycles have been trying to bottom and or have been bottoming and moving back up to an overbought territory. So we're just letting things kind of play out, and we're looking to actually add to our short position on any strength going forward. Looking at, we'll jump to the SP 500 first. Here's the SP 500 daily chart. You can see here this morning, this is the futures. You can see this morning we're trading up a little bit higher this morning, about 1/3%. We've got a couple cycles here, the green and yellow, starting to get up into the overbought territory. And overall, we're going to have some key resistance, more or less at this previous high will be main resistance, but overall we've got some pretty key resistance right through these tops and through this average price here, which is kind of where we're starting to stall out a little bit. And with any luck, we'll see prices maybe stretch up a little bit higher, maybe even come very close or piercing this previous high, and then from there I think we could see it start to give way and head down. So that's kind of what we're looking for going forward. Now, if we look at the futures intraday charts, you can see here the last major rally that we had, we actually saw prices have a nice strong move up, started to kind of round itself out, and you start to see this whipsaw price action where price goes up, comes down, goes up, pushes to a new high, comes down, kind of consolidates. You see this kind of price action, and then it kind of gives way and rolls over. And that's somewhat to where we're trading right now. We've got that big move up, and we're starting to see this choppy price action. Overall, the market could actually squeeze a little bit higher, coming up into more or less, if it could come up into this area, push just a little bit higher today or Monday, or gap higher on Monday, and then sell down. We could see another big bleed off heading to new lows in the SP 500. So it does look as though it's starting to get choppy, and we're keeping our eyes for that. Now, yesterday we saw, if we just pull up the stock market kind of momentum chart here, you can see what we're looking at on this chart are the advancing declining shares on the NYSE, and the key thing to look at here, you can see we had about a ratio of about 4 to 1 almost, so meaning there were 4 buyers to every 1 seller. Usually a ratio of 3 or higher I consider to be the market to be overbought, and everybody's kind of chasing the same move. So that's what we had yesterday. Same with the NASDAQ wasn't quite the same, but the NYSE was showing everybody was piling into brand name stocks. And usually when everybody's doing it, the momentum should stall out in a session or two and reverse, heading back down. So that's kind of where we're staying. This is one early warning that everybody's starting to get a little overly bullish, and we could be topping out here. Another key point to look at here are the new highs and new lows. They're both actually trading around the same levels, and that's not a very good sign. We really want to see the new lows trading down at anywhere from about 5 to 10 at most, and we want to see the new highs trading on both well over 100. Instead, they're both about even. After a pretty strong bounce in the market, it's not a very strong sign. So keeping that in mind, the market is still struggling to hold up. Now looking at the bar chart momentum index, this is a pretty important one that I like to follow. I haven't updated on it in a while, but we're finally at another overbought territory. Anything above the 101 here I consider to be an overbought market. Usually just means too many stocks have moved up too fast, too far, and there's going to probably be some profit taking. We usually see some type of contraction back down to the neutral zone, which is around the 100. Anything trading below the 99 level we consider to be an oversold territory, and things have just oversold, sold down too quickly, too far, and usually see a contraction back up into the neutral middle zone. So yesterday we gapped higher, took a short position, started to pull back. Now hopefully we'll eventually see this continue to move back and come down to an oversold condition once we have our short position, but overall we're kind of starting to load up as we get into these overbought territory, and we're seeing the equities market start to become a little more unstable with some waves of buying and selling on the intraday price action. Let's jump to precious metals real quick. Here's the gold chart. You can see here's a 4-hour chart going back about a month, and you can see here we've had we had a couple days of rumors. We had a rumor back here showing that there could be some QE3, and we got that nice surge. Then we had another rumor here that brought it back up, and then of course we had the headline news with Mario, and that really kind of helped push things even higher, kind of giving us a double rumor effect. And now we're coming up to this key resistance zone, which we've hit several times in the past. If we were to go back, you see we've hit it several times and sold down. That's where we're trading this morning. You see we came up, just touched that level, starting to move back a bit, but overall it could still pierce it. The key is it going to close above it or below it today, and that's a pretty important level for progress. If it does close above it, then it's more of a bullish sign for metals that they're starting to get some pretty good momentum. Just jump to the weekly chart. Weekly chart, you can see where we're trading. This is a pretty key resistance zone. Overall, we're still in this consolidation / downtrend, and in the grand scheme of things, gold hasn't really moved up a whole lot. Once it starts to break out of this pattern, I would expect it'll run to 18, 19, and then it could be off to the races to about 23, 2400 if it can grab that much traction. Overall, we're seeing some pretty good volume in gold this week as it's moving up, and a few rumors really kind of adding to the volume. The question is, will this jump up into resistance? That's more or less just been on some rumors and news, nothing really factual. Will sellers step back in and continue to hold it down for a little bit longer? Overall, I'm bullish on gold, but I don't want to jump the gun too early, just because we could actually see gold, we've seen in the past, really at the end of these patterns, really drop off fairly sharply and then explode to the upside. So I'm in no rush to really get in. I think there's a lot of room here to get in for gold, so I'm not trying to pick it early, because we could see the US dollar continue to move up, and we could see gold really shake everybody out, really breaking these lows, and we'll see some pretty big selling before we actually go higher. Looking at gold miners ETF, you can see gold miners have had a nice run. On a percentage basis, they've had a massive run in the last couple of days. Just looking at this chart, you can see these recent moves, these past moves are about equivalent to what we're seeing now. Maybe we might have another up session or two. Overall, it's still in a clearly defined downtrend, and it could stall out at any time. 44 will be the key resistance zone, 44 to the 43 level, where these previous consolidations and pivot lows are. That's pretty much where it's trading right down here now, but it may squeeze a little higher, and we could actually still see it continue to head down. And it's not out of the it's not clear yet if it's going to break out to the upside. Looking at the silver chart, you can see silver, grand scheme of things, just jump to the weekly chart again just so you can see the big picture. Silver trading way down here, still in a bearish pattern. It's got multiple mini bear flags that have formed. This is a multi-week bear flag still, and very similar to gold. Gold, it's hidden a little bit more. It is somewhat the ending here of a bear flag in gold also. Still pointing that we could go still lower yet, and it's kind of my main concern that that it could still unfold. But looking at going back to the 4-hour chart, you can see we're holding up nicely this morning. We broke above some minor pivot highs with a little tiny, you can almost say it's a mini handle, and it could end up extending a little bit higher and pushing up into resistance around the 28, which will be a whole number, but it could go up to about 28, 25, somewhere in that range. Looking at bonds, here's the 4-hour chart of bonds. They had a nice breakout, nice push to the upside. They're starting to have a little bit of a fade back down, having a little bit more of a meltdown with this morning with money moving into stocks. Overall, we are coming down to a key support zone. Just drawing a line across here. You can see we've got a previous key pivot high. We've got several little levels here that have touched this point before. A breakout here, another pivot low here, and that's where we're coming down and trading at this morning. Volume, we had some strong selling yesterday, but this morning on this extended continued move down, really it's happening on almost no volume. I wouldn't be surprised if we see it grab some stability here and possibly at least trade sideways, if not try and make a run for the highs. And of course, if we see bonds move up like this, then we're going to see money flow out of stocks and commodities, as it'll be a risk off kind of move. Everybody's going to be moving into dollar and bonds. Looking at energies, here's the crude oil chart. Overall, it's had a nice move up. It seems to be forming more of a bear flag in my opinion here. We had a move down. It's kind of forming a bear flag. If we just go to the daily chart, this price action, if we just zoom in, make it a little more clear, to me looks more bearish than anything. We did have a nice breakout and run to the upside. We did hit a key resistance level that I pointed out about a week ago from way back in the chart here. Overall, we've had a strong move to the downside, and now it's grinding its way up, and it's actually happening on relatively strong volume, but it's not really moving anywhere. If you were to just box this candle in here, this big red down candle, you can see we're trading inside this candle, and these are inside trading days. Usually that means we are going to see prices continue to move down. It's actually a very bearish price action. So that candle formation is bearish, and also just looking at it more of a chart pattern, you've got a bear flag and a bear flag pole, and it points to more or less back down to the 84 level, or 86 level at least anyway. Right through the middle of this noise here will act as key support, just because that's where the average contract will be holded price wise. So somewhere down to the 84, 85 I think will be a downward target for crude oil. Looking at natural gas. Natural gas is holding up fairly nicely. Still looks as though it could continue with one more wave down to the 3 to 290 level, and then from there could continue to march its way higher. Keep our eyes on that one. We had this little pattern, this more or less this rising channel here. We had that break down this week, and now it's kind of consolidating. Got a little bit of whipsaw action overall. We'll just see how this kind of starts to consolidate. It'd be nice if we see the three-wave correction down somewhere into this level here, which is going to act as support, and then from there could end up seeing natural gas start to naturally move higher again. Overall, the price action here, we've had some strong surge at the beginning, had some pretty good volume continuing to move up as it stair-stepped its way higher. Usually this pattern will break down fairly sharply, which it did. And right now we're seeing volume looks as though it's starting to decline a bit. So as prices pull back on declining prices, it's actually bullish, and we're just kind of looking for this ABC, this three-wave correction to come down here, kind of wash the market out. It would be nice if we could pierce this low. That would shake out some stops, and from there around the 3 level we'd probably see an opportunity to get long natural gas. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.